Candlestick patterns or any chart patterns are often ignored. They prefer technical indicators, which show them beautifully with lines where they should enter the deal, or some fundamental analysis, news analysis of some company reports. But actually, to be honest, candlestick patterns and chart patterns of chart analysis can give a lot of information about the market and can even be a separate signal to look for entry points on the chart. So in this video, I want to talk about a candlestick pattern called double top in general, and what more I would like to say about candlestick patterns that many people perceive them as some kind of horoscope. Well, I mean, the chart, if it formed in some pattern, that means it's going to be the one. Or if some kind of triangle has formed on the chart, it means it will go up or down. It's like omens or some zodiac signs. But in fact, the way the chart is placed, how exactly, on which figures it draws, it contains a lot of information about the market. And it's no coincidence that every time you see a double top, it will be a good signal to enter the trade. So let's basically talk about the figure. Double apex. I've chosen a section of the graph where this figure occurs twice. This is what this figure is called a double top. That is, the chart first rose, tested some level, then went into correction, returned to the same level, and then went down. The formation of the double top figure tells us that in this particular zone, we have a resistance zone. We have resistance levels. Let's put it on the chart. Here's the first level of resistance, is the beginning of it. I always say that resistance levels are actually a resistance zone. It's rare that bounces come from exactly one particular round seen. This is usually the price range from which we will expect bounces in the future. So, what does this figure really show us? Double apex. It tells us that we had a trend. It settled at some price that seemed too favorable for too many to buy. This usually happens at round levels, such as the Bitcoin level of 110,000, 110,100 right now. This is just the round level, where at 110,000, at this nice round price, there may just be other traders pending sell orders at this nice round price. They consider this price to be favorable for sales. And as you can see, the chart bounces back down every time it approaches a resistance level. Figure double. The top shows that we not only have a resistance level formed, but it was also tested once, and the chart went down after that as well. Here we can see another figure far away from the chart, double apex. Again, we have a local rising trend price, hits a resistance level, bounces, then tests the resistance level again, and bounces back down. In this case, it literally points to the same resistance level, the same resistance zone as the previous double top. But even if they were standing apart from each other, the very fact that two highs have formed on the chart, which are approximately at the same level, tells us that the chart is very likely to go down from this resistance level. And it's usually the rebound from that resistance that's pretty strong, as in this one. And here in this case, it is stronger than the correction that was before the test of the resistance level. Solid analysis figures are good because they can be used on different game days, in different assets. They simply indicate, in this case, the double top simply indicates that there is a lot of liquidity concentrated somewhere here on the sell-off. And every time the price approaches it around the same level, we see a bounce back down. And such a model will work both on a gamut of 1 minute and a gamut of 1 month. It is simply a fundamental market law that from large liquidity zones, the chart will bounce one way or the other. Now let's talk about a similar figure called a double bottom. This is an inverse figure, a double top. This is where we can see a clear double bottom. This tells us that exactly at these levels, the support level is concentrated. The support zone is concentrated. We can mark it down and use it to trade the next upward bounce. As you can see, we had a falling trend here. The price reached some level, marked it. There was a small bounce after that. And again, from this level, from these price levels, bounced upwards. This means that at around 74.75, Bitcoin is more likely 75 that bounces from this level have been centered on a large number of buy orders. And there's quite a bit of liquidity here. And seeing this formation of this figure, we can open a trade up because we have formed a clear figure, a double bottom. It already, in this case, will mark support and probable continuation of the upward trend. Such a simple figure helps to find support and resistance zones on the charts quite accurately. And unlike classic resistance support zones, which are built by several points. A double top or double bottom is built by only 2 points and can work quite quickly to start trading and search for signals. As I said, it's a fundamental market principle. It works on any flight, on any asset. But the important point is that the higher the frame you choose, the larger movements you analyze. If you've looked at 1 minute before, that's some specific resistance we were looking at. And here, we see major resistance, which is on the 4-hour chart, here every 4 a.m. And the formation of such a double bottom tells us that we may have a very long-term trend, which, as you can see, in this case, lasted more than 3 weeks on Bitcoins. And the bigger you play, the bigger trade areas you can capture with your trade. I also advise all sacred figures, including double top, double bottom, to be used in conjunction with similar indicators. If we are talking about bounces from horizontal levels that gives us double top and double bottom, it is better to use heel, which are also sharpened to find bounces. On a chart, for example, we can take the relative strength index as well. As you can see, in our cases, it will both times show the news, which also confirms the up signal. But apart from that, it could be any other stimulants, like stocks, AO, or other technical analysis tools. It is also worthwhile to confirm the various figures on older techniques before using them. For example, you can switch to the daily time frame and make sure and see what the market structure is, what the previous levels were. For example, here you could see that around this level support has been there before, and also the chart does not have a clear trend. And secondly, it is the resistance support levels that usually work well in charts, not the levels this. But these are all additional tips to help you better navigate figures, such as double top, double bottom. In fact, even without additional confirmation, this is a pretty good signal that the market is about to bounce in the opposite direction. We're going in. As soon as we see that after the second bounce, the chart has fallen below the retracement level. At this point, we can already enter a sell trade. I recommend betting a little bit higher than the double top level and a little bit lower than the double bottom level if we're talking about a double bottom. In this case, the deal will close automatically with a loss only if the main resistance support level is broken. And if it is broken, then we just move on to analyzing another trade. Feel free to use funny patterns. They give you quite a bit of information about the market, and it's a good tool for your trading strategy.